Little weakness crept into our grain trade to start out the trading week. Let's take a look at what's going on in the corn market first with our quotes provided by Bar Chart on the corn trade today. We are seeing gains on that, losses on that nearby May contract that are approaching double digits. Just a moment ago, they were 10 lower. Now we have May corn down 9 3/4, and we're trading at $5.48 per bushel. We have it trading about 11 cents off its overnight high. And December new crop corn now quoted at $4.66 1/4. That would be down 5 1/4 cents right now. Onto the soybeans, we currently have May trading 3 1/4 lower at $14.13. Now this is interesting because it went down all the way to $14.05 1/4 and then bounced about 8 cents off of that already. So a real tug of war going on in the soybean market right now. New crop November, well, it's trading 5 1/4 cents lower at $12.14 3/4. About 4 cents from its low of the overnight and early morning trade. Now in our wheat market in Chicago, we have the May contract 3 1/4 lower at $6.23 3/4. July new crop is dropping by 4 cents right now. In the Kansas City trade, you have the May contract down 10 at $5.75 1/2 per bushel, and July down 10 as well at $5.81 1/4. Spring wheat market in Minneapolis has May trading 5 1/2 cents lower at $6.21 1/2. And July down a nickel at $6.30 1/2. In the cotton market today, well, we have the cotton on the July contract 20 points lower at $85.52 per pound. And we have December dropping 52 points at 81.99 cents per pound. And now it's 82.05, so it's back up above 82 cents. Well, we're joined by Chris Swift of Swift Trading Incorporated. He's based in Nashville. Chris, you folks at Swift Trading have been watching, I'm sure, the Commitment of Traders report. And we noted where last week, I believe I put the numbers together. We can bring them up here. But we're still very heavily net long in the corn and soybeans on the part of the commodity funds. Is that a danger to this market?
Well, you know, anytime it's dangerous when you got all the boat loaded on one side. But in all honesty, this seems to be a long-term trend. The need for soybean meal, soybean oil, which is almost back to contract highs this morning, and the need for corn for Chinese pork production is going to continue for a long time. So we're not really looking at this as just a short-term blip. And the thing that we've noticed is we rose very high in price in both corn and beans, and are now just sitting there. We've not had a correction of any significance to pull the market back in price. We've just been marking time, and that kind of leads me to believe that people believe the next most probable move will be back to the upside again.
Chris, in the July Chicago and the Kansas City markets here, well, let's see, let me think about this. I think it's May. I think they both broke through their 100-day moving average support line now. Is that hazardous here?
It's a little bothersome because we knew that the cold weather and lack of moisture had impacted the crop. And now we've got the moisture, and over the weekend we saw some more warm weather pop back in. So it looks like the wheat crop is finally going to get some information to see whether or not the damage has been anything significant or not this year. But I don't think it's been anything terrible. It's just probably not going to be one of the better wheat crops we've raised.
Okay, we'll break here. We'll take a look at our livestock trade in just a moment with Chris Swift. Come on back. The livestock trade is open. Let's take a look at what's going on. And on the live cattle board, remember, we had big drops going in the corn market. Live cattle are higher. April up 67 now at 119.07 per hundredweight. We're within a dime of our high of the day. And June up 67 cents. On the feeder cattle market today, we now have the April contract 72 cents higher at 140.15. And after dropping $2 on Friday, May is now up $1.37 at 146.05 per hundredweight. Lean hog trade has the April contract up 2 cents. We're at 94.27, but all the other months sharply lower. May down $1.15 and June down $2.27 at 98.32. Let's go back to Chris Swift here. Chris, what is going on here in this livestock trade to make the market move today?
Well, we got a cattle on feed report on Friday that showed us we've still got more inventory to have to work through, and most of the sales that I've seen over the last couple of weeks suggest that maybe March is going to have another high placement month. But we just know that we saw some converging of basis on Thursday and Friday of that last week, and now we know what the information is as far as supplies, and we're all still waiting for that pent-up demand to come about and see if it can consume what everybody is being preparing for.
We did not really have any surprise on the cattle on feed report. We did not have much movement in the cash cattle trade, still around 114, I hear. But on the beef cutout values, they've been surging ahead for a couple of days now. And we had some fairly sizable gains on Friday. Look at that. Choice cuts up $1.38. Selects were up $1.84. And so now that looks like we have the choice cuts actually about $4 higher than where they were a week before. So how optimistic does that make you toward the cattle?
Well, actually not towards the cattle too much, but what it does show is that they're preparing for the next round of spring break. So we know that this week and next week tends to be spring break. We get a lot of consumers out. The weather turns a little bit warmer, so I think this is just a little day in, day out buying from those that have not had a lot of bulk buying and looking out into the future, and that gives them a little bit of an edge to raise that box price a little bit against them.
Okay, well, thank you, Chris. I appreciate it. Chris Swift of Swift Trading with us. He's based in Nashville. Janet, with that, I'll turn it back to you.